All right, welcome to Coffee with Mark. And, it was interesting. I went live. There's something that went weird with our scheduling this week. So I apologize. We had an issue with the stock market update. And what happened is with the platform that I'm using, I have everything on my calendar. And there was a link to go live with and I guess it was a different link because I had about 40 viewers there, and I thought that that was a little bit on the low side, and then I went ahead and closed that and opened up another link that I had, and it looks like most everybody is here now. So, all right, and I didn't do it again. I didn't do it again. What I have on my end, I did it the right way. But something is up for sure. Something is up for sure. Anyway, let's go ahead and let's make this a good one. Let's go ahead, get started here. Welcome to Coffee with Mark. I do apologize for that little hiccup. I'm sitting in for Markus, and Markus is in Vegas, and he's meeting up, doing some things there, but he will be joining us next week. So with him in the studio like normal, running things from his computer, things seem to go a little bit smoother. But I appreciate you being here. Appreciate you joining me. There's a lot that I want to cover today, and I think it's an interesting day, a great day for trading, which might be a surprise based on what happened at the open. So I'm just going to go right into the charts here. Forget about the intro, and let's just talk trading. That's what we're all here for anyway. If you woke up this morning, you saw that the markets were all red. This came from news, or was a reaction to news, that Russia had invaded Ukraine. So that didn't sit well with the markets. And if we look at a 5-minute chart here, we'll see exactly what happened. Yesterday, things were sliding. It became more and more apparent that Russia would invade Ukraine, and things dropped for 3-4 consecutive trading days. Then things went sideways. News that Russia had invaded sent U.S. futures lower. We bottomed out around here, and then at the open, we were down about 2% across the board looking at futures markets. Now, with that open, we saw things start to come back a little bit, went sideways during lunch, and then in the afternoon, all of a sudden, the Nasdaq's positive, the E-mini S&P's positive, Dow's flat for the day, but quite a comeback. And, I mentioned this in the stock market update, but this is also something that we discussed in our mastermind call today. Markets do not like uncertainty. And typically, we see an overreaction to news, right? Now, whether this will be an ongoing concern and a lingering issue for the markets, that's where we have to see how the market digests this information. But when there was uncertainty, the market was falling. Once we had that news, it created a bit of a buying opportunity because the news is out. Right? And so I'm going to look at what happens when the S&P gets hit with multiple losses on daily charts and also weekly charts, what to expect. And my approach or my thinking regarding this information, maybe there's even a trading strategy or opportunity there. And I think that once we share some numbers here, it will make a lot more sense on why this happens and why there is opportunity when there is fear in the market. I will go and take a look at open trades here, but I want to get to some of the things that I've been working on. On President's Day, I was sitting there and curious about what was going to happen with this recent market slide, and I started to look at some numbers, and I want to share these numbers with you. So we're going to take a look at the markets. I'll share my trades, and we're going to cover what to expect when the S&P gets hammered, and I will be answering your questions. Let's start with what happens when the S&P gets hammered. What's next? Well, what does the S&P do after 5 losing days in a row? That was something that I wanted to know. And also, what does the S&P do after 3 losing weeks in a row? And is there a way to trade this? Or how can we use this information to our advantage? Well, what I did is I ran a daily test, and in the last 5 years, I was wondering, how did the S&P respond to consecutive losing days? And the information, I wouldn't necessarily say it was surprising to me, but I believe that the numbers paint a story that you might not always hear in the news, right? And this is where, when traders are fearful, there is opportunity, but sometimes we need to really keep that in mind, because it is challenging if you open up your platform and you see a bunch of red. Now, if you're trading a bunch of crazy stuff that you have no business trading, and you know that you're gambling in the markets, you really don't have a plan, you don't have a strategy, you're just tossing money here and there, then I don't think this information is going to help you much. But if you have a plan, if you're focusing on quality, Markus and I in these videos, we've talked about quality over the last couple of months, for the last at least half a year, if not longer. Although we had a little more of a shift from potentially trading some growth-oriented stocks now to value, we believe that that's safer when it comes to trading the wheel. The quality focus in understanding the company or stock that you're trading, and also understanding that it is a stock that you want to own, and also at a strike that you are willing to own it at, that's key before we even get into whether or not the trade is profitable or not, because once we get into the trade, we can manage it. Now, it might be that some trades last a little longer than expected, but we know how to manage it, and we're okay sitting through some downtimes. And the numbers show that those down periods do happen from time to time, but time is on your side if you're trading quality. So let's see what happened here. And again, what I did is I went back and I looked at the last 5 years, looking at the S&P, which is an ETF that tracks the S&P 500. And I wanted to see what happens after a losing trade and then consecutive losses. And I went year by year here, but here we see that with one loss in 2017, after one loss, 37 times we had a win, 66 times. This was out of 66 trading days following a loss. And this meant that 56% of the time after a loss, it was followed up by a winning day. Okay, interesting. Now, in 2017, after 2 losses in a row, 19 days were wins out of 29 days that took place after 2 losses. This meant that 66% of the time you had a win after 2 losses. Interesting, right? Because it can be difficult if you have back-to-back losing days to think, oh gosh, what's next? You know, is this the end, right? After 3 losses, we see here that 8 out of 10 times there was a winner. That's 80% of the time after 3 losses, you had a win. And then after 4 losses, it only happened 2 times in 2017, but 100% of the time it was a win. Now, this was an easier year to trade, so I'll give you that. But the worst losing streak here, this is where after 4 losses, and again, every time you had a winning day after that, the first 4-day losing streak was a 4-day slide. It recovered in 7 days. The next 4-day slide was a 1.8% loss over that period. It recovered in 24 days. And I think that these numbers are important because the markets tend to fall faster than they recover, but they do recover, right? So it's difficult. I don't always think, oh, this is a slide, this is a slide, this is a slide. You would have missed out on so much opportunity over the last 20 years if that was your thought process, right? But if there is a slide, and depending on the strategy I'm trading, I have to assume or understand that, okay, it takes a little bit longer. I don't expect things to bounce back immediately, right? I have to give it a little time. Now, let's look at what happened in 2018. 2018, I don't have to go through each individual trade here or example, but you see here that after 1 loss, 55% of the time you had a win. It got a little worse after 2 and 3 losses. In 2018, we did have some bigger losing streaks. Here we see that there were 2 times there was a streak of 6 losses in a row. Once, actually this should have been 2. There were 7 losses in a row. Actually, it was just once. And then once there were 8 losses in a row. So the worst losing streak in 2018 was 8 losses in a row, and then there was a win, right? But you see that a majority of the time, if we look at these numbers, a majority of the time you're seeing on the day after a loss or multiple losses, it's 50% or better, and that was in a difficult year when you had some bigger losing streaks. Now, with those losing streaks, there was a 12% drop on an 8-day slide, and it recovered in 17 days. Just to clarify, that means that after those 8 consecutive losing days, it took 17 trading days to get back at the levels that we were before that losing streak occurred. And again, it was almost double the time period to get back to those highs than it was that slide. So I think this is also where psychologically it feels a little more painful, because you see that it's a quick drop and then it's a slower recovery, but it doesn't mean that it can't recover, right? And this is where I think many traders, and this doesn't go hand in hand with a strategy where you have fixed stop losses, right? If you have a stop loss that you've tested, it's important to use that stop loss. But I think that it just goes to show that a lot of traders bail when things get difficult, but there is this recovery period, and sometimes giving a trade more wiggle room or looking for opportunity after the drop, that's when traders can be aggressive or just be willing to risk money in the market, and there's opportunity there rather than being gripped by fear and bailing and getting out at the worst possible time. So let's look at 2019. Here it was 49% of the time after a loss there was a winning day, so about 50-50, about a coin toss. But interesting to see that after 2 losses, a real high winning percentage for this year. After 3 losses, not that many 3 losses in a row here, but it was a little bit worse, and then it improved. The worst losing streak in 2019 was 6 losses in a row, and here we see that this losing streak did take a little more time to get that recovery. It was also because you actually had another losing streak, not 6 days in a row, but another losing streak that occurred during this period. It did take 2 months to get back to that high. 2020, we see after 1 loss, 75% of the time you had a win. After 2 losses, it was a coin toss. After 3 losses, it was 56% of the time. But you also notice, even though after 4 losses it might be 50%, after 5 losses, 50%, you see that these losing streaks are very rare, right? To only have 4 losses in a row happen 4 times in a year, or 5 losses in a row happen 2 times in a year, 6 losses in a row happen 1 time a year. That is, I think that's an important takeaway. In this case, in 2020, which was the worst drop since the housing crisis, we know unless you've been sleeping under a rock, you know that the pandemic occurred in 2020, and with a 7-day slide, it did drop 13.5%. It did take multiple months to recover, but that was also during the worst market crash in over a decade, and arguably the worst, or if not the second worst in many people's lifetime, right? So this was a little unique. Now in 2021, after 1 loss, 57% of the time you had a win. After 2 losses, 63% of the time you had a win. And so here you're starting to see better numbers, at least on the probability that a win will occur. But there's this theme, and that is 4 losses or more in a row is actually a rarity. It doesn't happen that often. And I think that traders, it feels like when you have 4 losses in a row that it happens all of the time, right? And you're like, oh my gosh, this is going to happen again and again and again. And it just doesn't happen that often, right? In 2021, 4 losses in a row occurred 3 times, and 5 losses in a row occurred once, and there was not a losing streak worse than 5 losses in a row. Now, the worst losing streak, 5 losses in a row, it was a 1.72% slide, and This took place over 5 days. It took a month for the recovery there. But again, the market did come back. It wasn't the end of the world. And I think that it's important to be aware of this. It's important to reference this. Now, I also wanted to look at, so those are the numbers on daily charts, right? But I think that when you take a bigger perspective, it's more valuable and a little more relevant to our style of trading. And I did a test on the S&P, the SPY, using the ETF as an example for data. And we see here in the last 5 years, how did the S&P respond to consecutive losing weeks? Well, between 2017 and 2021, after a losing week, let's go back. After a losing week, 39 times you had a win, and there were 66 losing weeks. So 59% of the time you had a winning week following a losing week. Now, this is where I think it gets really interesting, because after 2 losing weeks, 19 times you had a win out of 27 back-to-back losing weeks. So 70% of the time, 2 consecutive losing weeks was followed up by a winning week. That's a pretty solid number. That's a strong number. After 3 losses, and again, it's still better than a coin toss, but not, it doesn't happen too often. In 5 years, we had 3 losses in a row take place 7 times, and 4 times it was followed up by a winning week. And then the biggest losing streak in a row, 4 losing weeks in a row in this 5-year period. And every time after 4 losses in a row, the S&P had a winning week that followed. I believe this paints a very nice picture here. When you're looking a little more longer term and you're looking at winning weeks, you typically see that after 2 losses, the market comes back with a win. After 3 or 4, it comes back with a win. And even during the pandemic, we didn't have 5 losing weeks in a row. Now, just to look at these dips and then how long it took to recover in 2018. So in 2017, there were no consecutive back-to-back-to-back losses on weeks. But in 2018, it happened twice. And in 2018, one back-to-back-to-back losing week situation took 39 weeks to recover. So this was the longest. And this was recovering from a 5.7% drop during that period. The reason why it was so long, though, is because you had 3 losing weeks and then a win. And then I think it was another 3 losing weeks after that. So you had to recover. You didn't have the winning scenario, bring it back to positive before that next losing streak. At any rate, the second losing streak of 3 losses in a row took 8 weeks to recover. This was recovering from a 13% drop. In 2019, there were 2 times when you had losses 4 weeks consecutive. So losing week, losing week, losing week, losing week. And the first time, it was able to recover in 3 weeks. So you had 4 losses in a row, and then it took 3 weeks to recover. Not too bad. The second time it happened, you had 4 losses in a row. It took 9 weeks to recover. Again, kind of what we saw with some of the numbers with the daily. It takes at least double the time to get back and recover from the loss. It's a quicker drop, takes a little bit longer to recover, but it does recover. And then in 2020, we did have 4 losing weeks in a row. It took 7 weeks to recover, but again, about double the period to recover from the loss, but it does happen. In 2022, we've had 3 losses in a row. We have not recovered yet. So this is one that I would like to see, but what are my takeaways here? What can I gain from this? One, losing streaks do happen, right? You can't expect, even though traders tend to be, or the markets tend to be perpetually bullish in nature, right? More people are putting money in the market over time than taking money out and putting it in other investments. That's just always been the case historically. Even though there's that mindset, streaks do happen. We know that losing periods happen, but it's so easy to get caught up in the headlines and the doom and gloom. If we were to say, markets did okay today. Nobody would want to click on that link, right? If we were to say markets are getting pummeled, Russia invades Ukraine, the Fed's going crazy, it needs to be locked up in a room. You have interest in that, right? So I mean, this is where the bad news is easier to be drawn to, and I think that the same thing happens with traders and markets. Traders get fearful because of the news, and it doesn't mean that if you're not comfortable risking money in this market environment that you should just trade like crazy and risk money. But I believe that if you are trading a strategy, if you're trading with rules, if you are doing your due diligence, if you're a disciplined trader, there's opportunity to be had. Another takeaway is really daily losing streaks of 4 or more are rare. You might see 1 or 2 losses in a row, but 4 or more really is rare. And losing streaks of 3 or more are actually rare. And then another takeaway, when there are losses, patience is key. I mean, for me personally, I believe that in this environment and also this morning, if I would have panicked and gotten out of positions, it would have been the worst time to get out of positions. And I want to go back to a daily chart here because I want to see where we're at with the S&P, but also just show exactly what I mean by that, because the charts tell the story. And if we look at the S&P, we see that today the S&P opened significantly lower and rallied. And right now, as we approach the close, the S&P is up 1.5% today. This morning, it sounded like there's no way that would be the case. The Dow hasn't had the same comeback that the S&P and the NASDAQ has. The Dow, though, turning positive. At one point, the Dow was down. So yesterday, it closed at 33,131. The low, gosh, am I reading that right? Almost an 800-point drop. I'd have to do the actual math, but just a huge swing, now positive, now 57 points higher. The NASDAQ opening lower, and it's rallying all day long, up 3.3%. As far as the consecutive daily and weekly losses go, so the S&P, I guess this would have been a great session to do yesterday, but the S&P had 4 losses in a row, and again, that's rare, that's not common. And today we're going to end with a win. So here, after 4 losses in a row, we come back with a win. 4 losses or more, very, very rare. Let's look at actually a weekly chart here. And on a weekly chart here, we see that we have not erased the losses for the week that we had earlier before today's session, even though it looks like we're going to finish up 1%. S&P looking at 3 consecutive losses if it finishes lower tomorrow. Right now, down 1.5% for the week. So again, 3 consecutive losing weeks in a row is a rarity. 4 was experienced over the last 5 years, a handful of times, but very rare. And usually after you have 3 losses, 4 losses, you have a comeback week. Now, with that takeaway, I think that there's 2 parts to this. One, if you're in solid positions, if you're in key positions, I don't believe that there's any reason to panic. But one thing that we also saw is the comeback. The time it takes to get back to where it was trading before the loss is usually 2 or more times the duration of the loss, right? So if we have 3 consecutive losing weeks based on tomorrow's close, then usually the comeback would be 6 weeks or more. So I think this is another thing to be aware of, because some traders, they want to buy the dip, which I don't think is a bad thing, but then you have to take the duration into consideration, right? So buying after a 3-week slide might make sense for 1 week or for 10, right? If you're just buying and thinking that it's going to get back to where it was before the drop, and you think it's going to happen in a couple of weeks, the numbers say you're wrong. So you might get a bounce in 1 week after a drop, but it takes multiple weeks, usually 2 times or more the length of the drop, to get back to where it was before. I think that that's a key takeaway because some traders are so short term in nature. They just toss money at the market, and it could be that there's an opportunity to be a buyer here, but it's either very short term in nature or you have to go out a couple of months. And as a wheel trader, I'm not super, super short term in nature with positions I'm holding, so I'm okay holding for a couple of weeks, if not months. In fact, my winners, where I was assigned, that made up more than half of my profits last year, I typically was holding a position for 25 days. So I expect to be in a wheel trade for a month if I'm assigned on average, whereas 84% of the time puts expire worthless based on my trading. So that happens week to week, but once I get assigned, I'm expecting to be in a trade for a month. So I want to take a look at my trades and share that with you because I mentioned it to everybody. And I see that there are some comments, and I appreciate that. We'll take a look at those comments as well. And let's start with, let's go to PowerX Optimizer. First thing I want to bring up is Boeing here. So Boeing, both Markus and I sold puts. We sold the 190 put expiring tomorrow. We did this, I believe it was Tuesday, when we put this trade on. So the stock did drop. It dropped below the 190 level, but with today's rebound, I mean, it looked like we were getting assigned tomorrow. That's why you can't count your chicks before they hatch. Here I was getting excited. I thought Boeing at 190, here we come. But things have reversed. So unless Boeing dips down below 190 again tomorrow, probably will expire worthless. But this is a trade both Markus and I put on. Another trade that we are both in is ADI, and ADI has worked out nicely for us. Now, ADI, we sold the 162.50 put originally, and this is where we were assigned. You look at this stock, just really nice with long-term support. Also, even though we've established a new range here, it's just seesawing above and below our assignment price. My break even on this is $151.41. So my break even, this is where if the stock started to fall and I closed it below at 151.41, it would be a scratch trade. If I closed it below 151.41, it would be a loss. But if I close it anywhere above 151.41, it's a winner because of all the premium I've collected. And if I close it at 162.50 or higher, I get to keep all of the premium I collected and maybe even making money on calls. I did try to close this one out at 90% max profit because we both sold the 162.50 call. I really, really would have loved to have that filled in the morning, but there was still a little premium left, so I couldn't get that 90% exit. This one rebounded really nicely, though. I'll see if I could roll it tomorrow, because I still like ADI. Let's look at CLF. This is another one that both Markus and I are in. CLF, another one, a little more volatile than ADI. This one establishing this new range. I really need to take another look at this tomorrow, see if I want to roll it or not. It's ADI, I really think is a solid stock and has been trading in these great ranges for the wheel. This one, it's a little more volatile, so dipping down to 16, rallying up to 21. We own it at 20. My break even on this is $17.13. So still making nice premium on this one. I'll see if we could roll it. But we've sold the 20 call. This one, I believe I was able to close this out. I don't have my platform open right now because the resources on my computer having too much open while I do these calls is just nuts. So I'd have to double check that one. I'm not actually. No, I didn't do that. Okay. So I'm not out of that one, but I might consider rolling. This one I need to take a closer look at, but it's worked out great, up nicely on this one, even though the markets have been moving like crazy, and some people have said you can't trade the wheel. The wheel's been working nice. All right. Let's look at LVS. LVS is another one. Interesting drop today. A bit of a recovery here. So Markus and my cost basis is around 47.50. Now we've collected a lot of premium, and I had it on my my to-do list to make sure I knew what the break even was on this one, and I forgot to do it. But I want to say my break even's about 43, 44 ish. But I'm holding this one. We've been in this for a while. We've flown a rescue mission. I do believe that, just like we talked about with the SPY, time is in LVS's favor. So no need to panic. And with time, we can squeeze out more profit. I do believe we're going to see LVS get back up to these upper ranges. Will it be in a week? I can't say. But now that we have this new range between 42 and 48, I'm looking at the 47, 48 levels to sell calls and to squeeze out more premium before eventually getting called away. Now, I will mention Ride because I am in it, even though I have a half of a position. This one, you know the deal with Ride. I think that unless this is your first time, this was a trade that we put on last year that was aggressive, and we made no other claim than it being an aggressive one when we put it on with our group. And it's been a bit of a pain in the butt. But Markus and I still hold positions here in Ride. I have a half of a position because I did close half of my trade out. I think it was about 1150 back here before this slide. So I don't have as much exposure, but for full transparency, that's the other wheel trade that I am in. I did put on an order today for BX, but it did not fill. This was one that we put on with our mastermind group. I was a little aggressive with what I was trying to get premium-wise. This one, what was it? I think it was the 105 strike. 105 put we were looking to sell. So that one I did not get filled on. Just a few others that we were looking at. BAC, Bank of America. BAC had some nice strikes available for this week and next week. So this one was one that I really liked. A few other maybes that I had on the list. AXP, we were looking at a lower strike here. I don't like it at these levels. Capital One Financial, another. Capital One, I want to say we were even at the 135 early on this morning, but that was a maybe. PNC was a maybe too. PNC, and I want to say it was even like the 182 that we were looking at. But either way, I was just going through the list. These were some that I identified as maybes for anybody that wasn't in as many positions as I am. I liked picking one of the financials. And if you have PowerX Optimizer, one of the nice things now is that you can look at correlations to help you decide if it makes sense to add a symbol. If you have a bunch that you're looking at, you're trying to figure out how to narrow it down further, it's nice to know just how correlated they are. But just for reference, if we did Capital One Financial, Bank of America, JP Morgan, we were trying to pick from these. PNC, you see here that based on this portfolio, these are all correlated. So I wouldn't want to trade all of these. And this is one thing I've seen some people struggle with the wheel. They're just getting premium greedy, right? Just, hey, great premium, let me take the trade. But when you get assigned, I do believe it's important to understand how your portfolio works with stocks, competing against one another. And if you're so heavy with highly correlated stocks, the truth is you're either going to benefit from that or you're going to get hurt by it. And I think it makes sense to balance things out a little bit. Here with the correlation matrix, you'd see that, okay, if I was in, trying to add one more, this, Blackstone isn't really correlated so much, but these others are. And that shouldn't be a surprise, but if you're not too familiar with the sectors and different industries, the correlation matrix can help. All right, all right. So let's see here. I know that there were some comments here that popped up, and Kai, I see your comment. So from deep in the red to dark green, 18,000 swing in a few hours, ending the day up 10,000. That's awesome. I experienced the same situation, right? Yeah, early in the morning, I was like, hey, I'm in quality stocks. I'm in positions that I want to be in. And I knew that there was the potential for the market to react to Russia, right? That shouldn't have been a surprise, but I'm in quality stocks, and I believed that by being in good quality stocks and being able to sell premium to lower my break even if there was a dip, I would be fine. All right. Let's see here. So, Wannabe Trader says, Mark, when we are playing offensive, though, sometimes we need to cut losses and move on because you never know where the end is. I did cut loss in one position, which was expiring tomorrow. I mean, ultimately, this is, it's you are in charge of your trading, and you are in control of just how aggressive or conservative you want to be. The reason why I shared the SPY numbers is I believe that too many people take losses out of emotion or solely based on emotion. And I believe that this doesn't give you, a license to remove your stop losses if you're using a strategy that requires stop losses. I'm not advocating that at all. I'm just saying that when someone is experiencing a loss, it's quick to think, oh my gosh, let me get out and panic, when if they waited, they would have been better off, right? And some of the bigger sell-offs, I know it's difficult to hold through it, but you have to realize what you're trading, right? Like during the pandemic, for many people, if they waited, they would have been fine. During the housing crisis, when people were getting out of their 401ks, at 50% to the dollar compared to where it was trading before, if they waited, they would have been okay. I'm not saying to wait on crap. That's not what I want to do. I'm just saying that when you have a strategy and a plan, typically by waiting, the streaks do come to an end, and you're usually in a better position, but you have to be aware that the time element, things don't bounce back immediately. Typically, you see a faster pullback and a longer move back to profitability. That's just the facts. That's just how it goes. But if you were in a position that you did not want to be in, I don't think that closing a trade and moving on to better opportunities, I wouldn't disagree with that. But I do believe that too many people cut losses too soon. All right, let's see. And then Bernard, I see your question about moving averages. I wasn't looking at moving averages at all. I was simply looking at closing days and weekly closes and losses and what happens after a loss. So there was no analysis other than just pure data. All right. Okay. Yeah, and SE Centauri says, so with this data, it looks to me like it may take 6 to 8 weeks, say, to recover from the 3 losing streaks. See, and that's what I would say. Like right now, the positions that I'm in, I'm fine with, right? But I would say that with the S&P, based on information and trading and data, it could take 2 times the duration of the length of the drop, right? So if you have a 3-week slide, it could be a 6-week recovery. If you have a 4-week slide, it could be an 8-week recovery. That's just a rule of thumb there. I was just more interested in, okay, what happens after you have these consecutive losses? How many consecutive losses is actually normal? And you see that where we're at, like this is unusual. And so I do believe that we're overdue for a possible bounce, right? All right. Good stuff. Good questions. Fantastic. Yeah. James says, drop this morning, everything back in green, follow your plan. Yep. Absolutely. Absolutely. Wonderful. Well, hey, I know that we've been doing this for 45 minutes if you count the first start. And once again, I do apologize for the scheduling thing. I need to figure out what the heck that is going on there. I did click the right link on my end, but obviously we had two links going, so I need to figure that one out. But on the bright side, Markus will be back next week joining me for stock market updates, and I believe we have a normal schedule for the Coffee with Markus, but always a pleasure filling in here for Markus. I really like trading if you haven't figured it out. So I like looking at the numbers, sharing some insight and what I've learned from the markets. I hope you appreciate it and enjoy it. And if you do, please give the video a like. And if you haven't subscribed to our channel, go ahead and do so. There's some good stuff. Markus is a pretty sharp guy too, so you'll enjoy him. All right. Well, that's going to do it for today's Coffee with Mark. Have a good rest of your day, and we'll see you back here in the morning for our